Hi everyone, Donnie Schultz, Embrace Home Loans here with your Monday market update, April 25th. We're starting the week off on the right foot here. Rates are moving back to the best levels that we saw last week. Last week did bring multi-year highs in interest rates. Average lender probably between 5.125 and 5.25 on their rate sheets for a conventional mortgage, best tier scenario. So we are moving back to the best levels that we saw last week. That is higher than the week before and higher than the week before that. But we are moving back below some key technical levels. I talked a little bit about it last Monday. Middle of the week, we identified a potential topping pattern on the 10-year Treasury and the UMBS 4.0. Some comments out of the Federal Reserve on Friday and some overseas comments caused pressure, but this morning we are seeing a big drop in treasuries, and that is now starting to carry over to mortgage-backed securities. So if this trend continues, we should see rates drop over the next couple of days. Question is how far will they drop, and does this begin the start of a reversal in the upward trend on rates? That's a big if. So movement today is really being caused by news overseas from China. They are having a COVID outbreak. They are shutting down more cities to try to control that outbreak, and that news is scaring markets. We saw some sell-offs in security markets this morning, so stocks, and we saw oil prices drop down because of this. It's a double-edged sword as far as news. The last time that we had COVID news was Omicron, and we thought, hey, all right, there's this new variant. This is going to scare markets and rates are going to drop lower. And that was the initial reaction. Maybe a couple of days of, hey, money coming into bonds, rates going lower because of the variant. And then all of a sudden we saw rates spike up, and it really started the trend of up, higher interest rates. And the reason that the trend changed and rates started moving higher was because Omicron then became viewed as a problem for inflation. Shutdowns affect supply chains, they affect workers, they affect prices. So if we have shutdowns, this narrative can definitely flip here and inflation expectations can move higher. Right now it's driving oil prices down, so that's always going to be good. That if oil prices are coming down, inflation expectations come down. But do we see a shift and a change over the next couple of days, or do we see this move into bonds and move out of securities continue, and that would really confirm the technical ceilings that we were watching last week. So last week we said, hey, listen, it looks like the 10-year Treasury, it looks like the mortgage-backed securities are forming a topping pattern. We might expect a little bit of a pullback here in the markets, and that was coinciding with the 10-year Treasury and mortgage-backed securities getting up to the highest levels that they've been at since the rate spike of 2018, and rates went up to right where we are, 5.25 on a 30-year fixed rate, and then all of a sudden they reversed. The Federal Reserve was increasing their short-term interest rates, and mortgage rates started declining, and they moved back into the high threes before COVID hit, and all of a sudden you saw rates at 2.875, 2.75, 3%. So could this be a longer-term top? Absolutely. Is there a risk? Absolutely. High risk, high reward right now. We want to be defensive with buyers. Buyers going into contract. I don't know if we're necessarily locking today. Some of this move has not been passed along the rate sheets. Most lenders still quoting 5.1, 5.25. So, I think that buyers have a little bit of cushion here to see if this can continue, but locks are on a very, very short leash here. We've been faked out a number of times over the last couple of months where we see these pullbacks and we say, hey, is this the top? Is this the top? And then all of a sudden we spike, and we spike significantly. So we want to be defensive. There's an opportunity here to possibly take advantage and see how markets play out. But I think for the most part, we will be locking sooner rather than later. And it's nice to have that float down feature where if this does turn into a top, we'll be able to lower the rates for our clients, down the line if rates move lower. Industry news, not much news coming out. We haven't seen updates from Fannie Mae or Freddie Mac since early January when they announced the loan level price adjusters for high balance mortgages and second homes. There have been some whispers on the FHA front. So there's been a lot of talk that the Federal Housing Administration might be lowering their mortgage insurance or making their mortgage insurance costs more competitive. So Federal Housing Administration, it's a government-run program. Borrowers pay an upfront mortgage insurance premium of 1.75% of their mortgage that gets wrapped on top, and then they pay a monthly mortgage insurance. That will vary depending on down payment and loan size, but most common is 0.8 to 0.85% of their loan amount on a monthly basis. And if you're putting down less than 10%, you're going to pay that for the life of your loan. So every year, the Federal Housing Administration will evaluate that mortgage insurance fund. They'll see how much money is in there, because that fund is used to pay lenders a percentage of the loan in case the borrower defaults. So they evaluate how much money is in the fund. They evaluate the delinquency rates on FHA mortgages. And if there's a surplus, they will consider adjusting the mortgage insurance collection from the borrowers. It's usually based off case numbers. So if you had a case number from 5 years ago, you might not benefit from this, but if you're buying a house with an FHA mortgage, you might see a benefit with this. There's been no announcements yet, so we haven't seen anything yet. It could be a lowering of the upfront. It could be a lowering of the upfront and the monthly. It could be going back to a cutoff on the mortgage insurance where borrowers aren't paying it for the life of their loan. So there's a number of things that they can do here. But again, the whispers on the street is that we might be seeing an announcement soon here on that front. Of course, when we do, we'll bring it to you on our weekly update. Anybody has any questions, you can reach out to me or my team anytime. Appreciate you guys. Have a great week.